It is 1979. In this room, a decision has been made that will change the balance of power in Asia forever. On one side, the British establishment, rulers of Hong Kong for over a century. On the other, a 51-year-old former refugee, a man who started with nothing. He has made an offer that seems impossible, audacious, almost insulting. He wants to buy their crown jewel, Hutchison Whampoa, one of the great British trading houses, or Hongs, that have dominated the colony since the Opium Wars. Its sprawling empire of ports, retail and real estate. And he wants to buy it without putting down a single dollar of his own money up front. Everyone in Hong Kong knows who Li Ka-shing is. They call him the Plastic Flower King for the fortune he made in the 50s. They know he's a savvy property developer. But this is different. This is a declaration of war on the old guard. If he pulls this off, he becomes a legend. If he fails, his reputation and his company, Chung Kong, will be shattered. The bankers see a risk, but Li Ka-shing sees the deal of a lifetime. He has spent years studying their books, their weaknesses, their culture. He knows something they don't, and he is about to use that knowledge to build the biggest empire Asia has ever seen. But to understand how he got to this moment, how a penniless refugee could challenge the titans of an empire, you have to go back to the beginning, to a time of war, poverty, and unimaginable hardship. Get free access to our online trading course in the description and in the pinned comments. If you want to learn more about ETFs, more about the foreign exchange market, and more about basic financial literacy, then this is a must for you. Be sure to download it. Li Ka-shing was born in 1928 in Chaozhou, a city in southern China. Into a family of scholars, his father was a primary school principal, but the world of books and learning was torn apart by war. In 1940, as Japanese forces advanced, the Li family, like millions of others, fled. Their destination was the British colony of Hong Kong, a supposed sanctuary from the chaos. But sanctuary came at a price. The family was destitute, and soon after they arrived, tragedy struck. Li's father, who had always been frail, contracted tuberculosis in the overcrowded, unsanitary conditions of refugee life. It was a death sentence. He unfortunately died in 1943, leaving his 15-year-old son as the man of the house. The boy who loved to read was forced to quit school. The responsibility of providing for his mother and younger siblings fell squarely on his shoulders. He found a job in a plastics factory, a world of noise, fumes, and grueling labor. He worked 16 hours a day, every day. While other boys his age were in school, Li was learning about production quotas, supply chains, and the brutal realities of commerce. But even in the depths of the factory, his mind was always working. He wasn't just a laborer. He was a student of the system. He saved every penny he could, living on the barest of minimums. He was driven by a memory of poverty so profound that it would shape his entire life. He wasn't just working to survive. He was working to ensure he would never be poor again. And after 7 years of relentless toil, he had saved just enough to make his first move. In 1950, the age of just 22, Li Ka-shing took the biggest risk of his life. With 50,000 Hong Kong dollars, a combination of his life savings and loans from relatives, he quit the factory and started his own company. Cheng Kong Industries, the name meaning Yangtze River, was a nod to the great river that gathers countless streams, a symbol of his ambition. His first product? Plastic watch bands. But the market was competitive. He needed an edge. He scoured trading magazines from Europe and America, looking for the next big thing. And then he found it. High quality, realistic looking plastic flowers. Italy was the market leader, but their products were expensive. Li saw an opportunity. He became obsessed. He taught himself the complex art of color mixing, creating a vibrancy and realism that his competitors couldn't match. He streamlined his production line, cutting costs without sacrificing quality. He was preparing for his moment, and it came in the form of a visit from a major American buyer from a huge department store. The buyer was blown away. He placed an order so large it would take Li's factory months to fulfill. It was the breakthrough he needed. Soon, Chenkong was the largest supplier of plastic flowers in Asia. By the late 1950s, Li Ka-shing was a millionaire. He had escaped poverty, but for a mind like his, this was just the beginning. He was already looking for the next, much bigger opportunity. As his plastics business boomed, Li noticed something. The rent on his factory kept going up and up. He realized the person making the most reliable money wasn't the manufacturer, but the landlord. In 1958, he made a pivotal decision. He would become his own landlord, buying a plot of land to build his own factory. This was his first taste of real estate, and it opened his eyes to a fundamental truth about Hong Kong. Land was the ultimate currency. But his defining moment came in 1967.
Week-long street demonstrations, whipped up by pro-communist mobs, take British Government House as their target. Posters demand the governor's resignation. Thousands of Chinese shouting Maoist slogans urge an end to British rule in the Crown Colony.
The Cultural Revolution in mainland China spilled over into Hong Kong, sparking violent riots and political instability. The British colonial government was shaken. A wave of panic swept through the city.
This was a moment he had long prepared for.
It has been the greatest honor and privilege of my life. Now, Hong Kong people are to run Hong Kong.
Britain learnt long ago that Hong Kong people know best what is good for Hong Kong.
Get free access to our online trading course in the description and in the pinned comments. If you want to learn more about ETFs, more about the foreign exchange market, and more about basic financial literacy, then this is a must for you. Be sure to download it. The wealthy elite, fearing a communist takeover, began to sell their assets and flee. Property prices crashed. This was Li Ka-shing's Warren Buffett moment. While everyone else was selling in a panic, he was buying. He held a contrarian belief that the crisis was temporary, that Britain would not abandon the colony, and that in a city with millions of people crammed onto a tiny rock, property values had only one direction to go in the long run: up. He used the profits from his plastics empire to build up prime land at bargain basement prices. It was a masterstroke of courage and foresight. When the crisis subsided and confidence returned, property prices didn't just recover, they skyrocketed. Li's gamble had paid off spectacularly. In 1972, he bundled his real estate holdings into Chenkong Holdings and took it public. The company was an instant success, making him one of the city's most powerful developers. He had a new goal: to dethrone Hong Kong Land, the property giant owned by the British firm Jardine Matheson, the ultimate symbol of colonial economic power. Which brings us back to the room. 1979, Li Ka-shing, the property baron, is now facing the ultimate test. He wants to buy control of Hutchison Whampoa, a company whose roots go back to the very founding of the colony. It is owned and run by the British elite. For a local Chinese businessman to take it over was unthinkable. But Li had a secret weapon: his relationship with HSBC. He had been a loyal and profitable client for years. He knew that HSBC held a 22% stake in Hutchison, and he knew they were looking to sell. He approached them not with aggression, but with a proposal of surgical precision. He offered to buy their stake, but not all at once. He would pay a small amount up front, with the rest to be paid over time, using the dividends from Hutchison itself to finance the purchase. In effort, he was asking the company to pay for its own acquisition. It was a masterclass in financial engineering. HSBC, eager to cash out and impressed by Li's ingenuity, agreed in a secret deal. They sold him their stake for just 639 million Hong Kong dollars, a significant discount to its market value. When the deal was announced, the Hong Kong business community was stunned. Li Ka-shing had become the first Chinese person ever to control one of the great British Hongs. The era of colonial dominance was beginning to crack. Overnight, his empire doubled in size. He now controlled one of the world's busiest container ports, a massive retail network, and huge swathes of real estate. He had gone from being a king of Hong Kong to a global player, and he was about to make the single greatest trade of his life. By the late 1990s, Li's empire was vast, but he was never sentimental about his assets. Through Hutchison, he had invested in a fledgling mobile phone network in the UK called Orange. It was the height of the dot-com and telecom bubble. Tech stocks were soaring to insane valuations. Everyone wanted a piece of the mobile future. Li, however, saw not just an opportunity, but danger. He sensed the market was becoming irrational, and in 1999, the German conglomerate Manson Man made an offer to buy Orange. Li, in a stroke of genius, negotiated the payment not in cash, but in Man's stock. Just a few weeks later, the British mobile giant Vodafone launched a hostile takeover bid for Man's Man itself. This triggered a massive bidding war, and the values of the Man's Man stock Li now held went through the roof. When Vodafone finally won, Li's stake was worth a staggering $22 billion. It remains one of the most profitable single transactions in history. And then just months after he cashed out, the bubble burst. The telecom and internet markets collapsed. Companies that had been worth billions went bankrupt, and Li had sold at the absolute top. It wasn't luck. It was the same instinct he had shown in the 1967 riots, an uncanny ability to see the storm cloud when everyone else was celebrating the sunshine. The deal cemented his nickname, Superman. In the decades that followed, Li's empire continued to grow. He became a major investor in early tech, backing companies like Facebook, Spotify, and the AI firm DeepMind. He diversified globally, famously following a buy west, sell east strategy, shifting his assets out of China and into stable European and North American infrastructure. Yet despite a fortune that peaked at over $37 billion, he remained famously frugal, a man who still wore plastic shoes and lived in the same house for decades. He poured billions into his private foundation, funding education and medical research across the globe. The memory of his father's death from tuberculosis had never left him. Get free access to our online trading course in the description and in the pinned comments. If you want to learn more about ETFs, more about the foreign exchange market, and more about basic financial literacy, then this is a must for you. Be sure to download it. And in 2018, at the age of 89, Li Ka-shing finally retired, handing the reins of his empire to his son Victor. But his story is more than just a tale of wealth. It's a story about survival, about foresight, and about the relentless drive of a man who saw an opportunity where others only saw crisis. From the ashes of a war-torn China, he built an empire that straddled the globe, outsmarting colonial rulers and dot-com billionaires alike. He is the ultimate proof that in the world of business, it doesn't matter where you start, it only matters where you are determined to finish. If you have enjoyed this story about Li Ka-shing, aka Superman, then make sure we hit that like and subscribe button, and I'll see you in the next video.